The New Zealand dollar against the Switzerland franc has reacted perfectly from the daily supply zone we identified earlier, but I am still not selling. Let me show you why. Welcome back to the CJFX trade, where we trade with structure, patience and institutional logic. This is an update on our previous NZDCHF analysis, and although price has respected the daily supply zone, my method says there is still one important confirmation missing before I consider a sell. Let me break it down using the CJFXTrade method. C4, which is the context. Let's begin with the higher time frame. On the daily time frame, price reached the supply zone between 0.46182 and 0.46378, exactly as anticipated. After entering the zone, sellers reacted and pushed price lower. That confirmed the zone is being respected. However, context is more important than reaction. Although price has reacted, the overall market is still recovering from the recent bullish move. So I don't want to assume that sellers are fully in control yet. In the CJFXTrade method, a reaction alone is never enough. That leads us to the 3P institutional filter. Now let's apply the 3P institutional filter. Present. Yes, institutional selling is present. The daily supply zone has produced a bearish reaction, showing that sellers are active. The second P, power. The rejection is encouraging, but it hasn't yet demonstrated enough power to shift the market structure. The third P, purpose. The question now is simple. Is this only a temporary pullback, or is it the beginning of a large bearish move? That is what we need the lower time frame to confirm. The 3L on CJFX method is confirmation. Moving down to the 4-hour time frame, the supply zone inside the daily supply has also been respected. But here is what stands out to me. Buyers are still technically in control. The bullish trend line that has been supporting price is still intact. As long as that trend line remains valid, I don't have confirmation to sell. According to the CJFXTrade method, I want to see price break below that trend line. After that, I want a fresh supply zone to form from the move that break it. That fresh supply zone becomes my confirmation. On the 1-hour time frame, the story is the same. Price continues to respect the bullish trend. The previous highs and lows haven't confirmed a bearish shift yet. So instead of forcing an entry, I will remain patient. My ideal scenario is the trend line break, a fresh supply zone form. That fresh supply zone align with the daily supply. Then I will look for a selling opportunity. Until then, there is no trade. The arrow 4 in CJFXTrade method is the risk management. This is where patience protects capital. Many traders see the first bearish candle from a supply zone and immediately sell. The CJFXTrade method teaches something different. We don't trade because price touches a zone. We trade when the market confirms our idea. Missing one trade is always better than forcing a low probability trade. My outlook on New Zealand dollar against the Switzerland franc remains the same. The daily supply zone has reacted exactly as expected, but I still need confirmation before looking for short. If the trend line break and a fresh confirmation supply zone form, I will share another update with my complete execution plan. If this analysis helps you understand how institutions leave footprint in the market, follow CJFX Trade for more institutional supply and demand analysis. And remember our philosophy: trade with structure, trade with patience, trade with institutional logic. This is CJFXTrade Method. We don't predict the market, we prepare for it, and when the market confirms our idea, we execute with confidence. See you in the next analysis.